Welcome, everybody. September 7th, Scott Riley with the Market Update Desk. Wanted to go over some interesting data that came out today regarding credit cards. The average credit card interest rate now is at 25%. That's in a big contrast to where it was that last year, this time, where it sat at about 15%. That extra interest payment is definitely putting stress on consumer spending that we're starting to see within the reports we get each week and each month. In fact, credit card 90-day delinquencies for people 30 or younger increased by 9%. That's a big increase, almost double. On top of that, in 3 weeks, we're going to start to have student loan payments start to be required. So we're going to have significant choices people are going to need to make for their spending going forward. This could realistically slow down consumer spending, and that definitely could trickle through into the economy within inflation and maybe start to slow inflation down a little bit. Today, we had the release of the FED Beige book. That is the Fed minutes from the last meeting. Wanted to kind of break down what that showed during those conversations that the Fed members had. Economic growth they are showing was modest. In fact, the retail spending was exceptionally low compared to what they had seen in the past. And and what this could do is start to show consumers have been using or have been used the cash that they've saved, and they're now having to use credit cards to make everyday purchases where they had savings to do that before. So definitely, again, another example of economic tightening. Job growth, it was subdued across the entire nation, and wage growth will continue to slow, is what they're showing. In the jobless claims that came out today, actually surprisingly came in 13,000 less than expected, and continuing claims decreased by 40,000. Now, as far as continuing claims, that could definitely be because people are falling off the time that they've got on unemployment and can no longer get unemployment benefits. So that could be part of what's going on with continuing claims. With initial claims, likely this is skewed slightly because the last 2 weeks we had 4-day weeks versus 5-day weeks. So the filing period for those people with first time claims was shorter. So likely we're going to see even next week's be less than expected. The bond market and mortgage backed security market basically took these in stride. We've recovered from being down in both of these markets for mortgage rates, and now mortgage backed securities are actually up 6 basis points, and the 10-year is down 2. So we saw some recovery from where the market opened, which is good. The Dow, Nas, and S&P have continued to see a pullback in those the last 2 days. One of those reasons is because oil prices, Saudi Arabia announced yesterday they're going to continue their voluntary oil cuts, and we continue to see West Texas crude and Brent crude increase in price the last 3 trading cycles. Unfortunately, I think that's going to cascade through to to the October CPI report when we see that because of the increased energy costs. So today we've got a lot going on with speakers. We have 4 separate Fed members speak today. Bauman, Bostic, Parker, and Williams all give speeches today. So we're going to see what the afternoon brings within the markets. We'll keep you updated if we see anything out of the ordinary. We look forward to helping you out. Give us a call to get pre-approved today, 616-293-2189.